AffordableRealEstateInvestments.com, where I teach you how to find affordable investment properties with confidence, hard work, and a little peace of mind. Hello, this is Lisa Phillips. Thank you for tuning in to AffordableRealEstateInvestments.com. And this session's podcast is going to be on staying away from the banks and instead going with credit unions. Now, let me start, I have been with very many banks, probably like all of you guys. Wells Fargo, Bank of America, B of A, Chase, BB&T, M&T, and PNC. A lot of banks over the years. And they're terrible. For all the fees that they make you pay and all the convenience they give you, they take it out in A, not lending to you, B, barely giving you a credit card with the credit limit that's worth looking at, and C, they deny you loans. If anything, go with a community bank. I am with a community bank now here locally in Virginia. That's been excellent. Now, they still aren't as liberal. They're very conservative. So the same car loan that I've been able to use 3 times with 3 different credit unions, I can't use with that community bank because it's more than 3 years old. So, I mean, I like this community bank, so I'm going to keep it. They're not all bad, but the big banks, terrible. Every time I've gone in there, it's almost like you should feel honored they let you ask. And why should I feel honored when you let me ask when you say no? This is at all stages. This is before foreclosure when I had super high 750 plus credit. During, I didn't really ask because I knew where that was going. And even after, even now where credit is definitely up there above the 700 mark again and clear history for the last 5 years, they're still like, no. Not at all. No increase in your credit card we gave you. No loans. Don't even ask. And for all of this time, every single credit union I have been to has been able to work either with personal loans or with the title loans or with getting credit cards. So I just want to say personal loans can be a really good way of funding your home improvement project because it's up to $40,000, sometimes $50,000 with the right places, and the interest rates can be as low as 2% or 3%, all the way up to 18. Don't go to 18, but up to mostly it's usually normal around 10, 9 or 10, or 7, 8, 9, 10. That's a really good rate to get $30,000 on if you need to make an investment. And most of it, when I ask, because I do ask about what the numbers, what scores get what. Honestly, you can have as low as 600, which means you basically pay everything on time. Every now and then you get a late fee or maybe you have a high limit, but very doable for most people. And another tidbit that I have learned when doing this is that be proactive about who you go with. Before you, even at the credit union, before I sign up now, and this is probably why my credit has gotten so well. You have 3 credit bureaus that people report your credit to: Experian, TransUnion, and Equifax. Well, everyone has one that's really good and one that's always behind. It's always because of what type of information, how they do their own private calculations. My worst one is Experian. My best one is Equifax. Some of the because of my foreclosure that I had, the second mortgage didn't report to Equifax, but it reported to Experian. Experian has a worse number than my Equifax. As time goes by, it gets farther and further away from what happened 2.5 years ago. However, because of that Equifax, and because they didn't report, maybe they didn't want to pay the extra money to report to the other agencies, it was always like a 30 to 40 point difference was a 30 to 40 point interest rate, depending on who used what. Now, sometimes people report to Equifax and they don't report to Experian, and some only report to TransUnion. You know this is a part of having credit, that you understand that certain people only report to certain agencies. So that causes a lot of that instability and inequity in what your score is with each one. Now, because I loved Equifax so much for the last year and a half, when I went to a bank and I asked for a loan, I would ask them first, what credit bureau do you report to or draw from to do your loan approvals? I only had one credit union who was hesitant about telling me, and I didn't, and no, that wasn't a credit union, that was my community bank, and I didn't even ask them then. Although I'm pretty sure he may have called me back and told me Equifax. If they say Experian, I don't sign up. It's not worth it. That extra 30 point difference That's my extra 30 points. That's my interest rate. That's my monthly pocket. And there's nothing illegal about you asking people how much or what credit bureau they're going to report to. What's illegal about that? That's just you being more proactive than someone else who doesn't say anything. Be a squeaky wheel, speak up, and ask. It's not like they can withhold that information for you. It's your information. It's your credit. Taking that ownership meant that I got more favorable terms. And that, in case, built up my credit history even better, which built up my, which lowered my debt to income ratio. All of that plays into it because I was strategic about it. And I made sure if I did ask for credit, they were going to the credit bureau that I prefer. And sorry if there were some credit unions that went to Experian, and I'm like, I'm not signing up. So that was one of my main questions. Usually I called before I even did this when I was looking for a new place. So take that under advisement. Stay away from big banks. I know they're convenient, but they're really not worth it because you don't get anything out of it. The only big bank I have now is PNC, which offers really great customer service and free checking. They're one of the last few free checking places without having a minimum. I don't like having a minimum of $1,500 or $2,000 in a checking account because that money needs to go in and out to fund different investments until, it's all accumulated. So the personal loans are easier to get with the credit unions. And B, when searching the credit unions, just make sure you check. Find out what's your good score, which credit union has your good score. And if you specifically target only those institutions for asking for loans, you're really going to see an uptick in all of your credit scores. And it's something that probably, now that I said it, makes a ton of sense. However, not everyone sees that. So know it, feel it, take ownership of it. It's something I just sort of naturally did because I was really protective of my credit. After my foreclosure, I was trying to build it up so much. I would go like, who are you pulling from? Because I knew it was in there. I knew what was in all of my credit files. But it's something I've learned and I've used, and it's excellent. Now all my numbers are basically up because I've been using that strategy, going to the guy more favorable to give you a loan with the greatest rates. And everyone else just follows suits like a bunch of sheep. So that's how it works. Deal with it, accept it, just learn how to go to the people who are more favorable towards your turns. And that is why I named this whole podcast, Stay Away from Banks. Go with credit unions, use personal lines of credits, and use credit cards if you have a nice low interest rate to fund some of the projects. Some of the people wouldn't say that, but I say that kind of debt is good debt because it's getting paid off by something specific. It's not me buying a truck that goes in a hole that I can never get anything from. If you pay for a repair in the house or a rehab or home improvement with these lines of credit, not only is it tax deductible, so you're going to get half the value back in come tax seasons from what they take out of your paycheck, which I'm sure is a lot. But it's also paying for something that's going to give you something back. You're paying to get this air conditioner fixed so that you can continue making $800 a month in rent on top of what you make at your regular job. I'm okay with using it for that. I do keep them very separate. My business lines of credit, I do not touch because I keep track of what I pay off with the rents I receive versus my personal. I have like one personal card, and it's like a U.S. Airways card, so I can, get points. American Airlines, one of those type of cards, so I can get points, and I pay it off like clockwork. So my personal, I'm not frivolous. I either have cash or I don't get it. However, this I do use credit to pay things off, but like I said, with financing terms, and even your regular credit card from the credit union will be like, hey, 12 months. 4% APR if paid in full before 12. Use that. Write that check. Use it for the rehab if you need to. And let 8 months to 10 months, or say 10 months of $800 coming in. $8,000. More than enough to pay off the $1,500 bill that you had at that time before the 12 months are over. Or if you could probably save that up in your own paycheck and pay it 12 months from now. So thank you for tuning in to the Affordable Real Estate Investments, where I teach you how to find affordable investment realty with confidence, hard work, and a little peace of mind. Thank you.
Everybody get up.